Hello all and welcome back. In the last video, we spoke about different investment avenues and we also looked at the types of deposits. Now we are going to look at the second investment avenue, that is investment in the stock market. So before we actually start speaking about advanced terminologies in stock market, I am going to cover the basics of stock market in this particular video. So let's first understand what do we exactly mean by a share. Share is nothing but a unit of equity ownership in a company. So what do I mean by that? So when I buy a share, which is measured in terms of one unit or in multiples of one, I become part owner of the company. Which means if the company has issued 1 lakh shares and if I hold 10,000 shares of that particular company, then I become 10% owner of that company. So if you have shares in multiple companies, imagine that you are owner of so many companies. Isn't that great? Right? Now let's look at features of the equity shares. First feature, like I mentioned, is the ownership. So basically when you invest or when you buy the shares of a company, you become part owner of that company. Remember, this is not the case when you invest in a fixed deposit. When you invest in a fixed deposit, you do not become owner of the bank, right? But when you invest in the shares of a bank, you do become partial owner of that bank or any entity for that matter whose shares you are buying. Now coming to the second feature, that is the dividend. Now remember, every time someone does an investment, it is for a certain return. So when you invest in shares of a company, the return that you are expecting is in the form of a dividend. And what is a dividend? In very simple words, dividend is the share of profit that the company is returning to you. So company will not pay you interest when you invest in shares. Rather, it will give you dividend, that is a share of profit. And why a share of profit? Because you are owner of the company. Then the third benefit that you get when you invest in shares is you get voting rights to vote in the annual general meetings of the company. So basically, all the important decisions of the company that are taken by the company, you have a right to vote to that. Right? And every share is equal to one vote. So more the number of shares that you hold, more is the voting power that you have. The next feature of a share is transferability, meaning you can transfer the shares to someone else. You can sell the shares to someone else. You can give it as a gift to someone else. So you have the right of transferability. You have the power of transferability. And the last point is limited liability, which means if you invest in the shares of a company and let's say the company goes bankrupt, even in that case, the maximum amount that you have to pay or you may have to pay because you are owner of that company is limited, and it's limited to the face value of that share. What is the face value? That is something that we'll see in the upcoming sessions. Now moving to the next point. How can you buy the shares? So you can buy the shares by two ways. Either you can buy it from the stock market at whatever is the market price, or you can buy the shares outside the stock market, which is also called as over-the-counter transaction. And when you speak about shares of unlisted companies are traded over the counter. Shares of listed companies can also be traded over the counter, but generally shares of listed companies would be traded on the market. Now when you buy these shares, what do you exactly get? So when you buy the shares, you may get a share certificate in a physical format. But if you see today's scenario, this would be applicable generally only if it's a private limited company. If it's a listed company, most of the companies have their shares in dematerialized form. That is in electronic form, in simple words. So when you invest in the shares, you today will get the shares in your demat account. Now since we've spoken about the demat account, let us also look at how can you open a demat account. It's very simple. There are two depositories in India. NSDL and CDSL. Now, what are these depositories? These are the entities who hold shares in that electronic form on your behalf. So just like a bank holds cash in a digital form on your behalf, in the similar manner, the depository will hold the shares on your behalf. So if you want to buy or sell the shares, you will have to place an order in the stock market, and ultimately it will be given effect to. So your shares would be handled by the depository. However, you cannot directly interact with the depository. You have to do that through a depository participant. So depository participant is like a connection, is a link between you as an investor and between the depository. So you need to select a depository participant. So to give you few examples, it could be something like ICICI Direct, Kotak Securities, Zerodha, Sharekhan, and there are so many others. So you have to select a depository participant, fill in the account opening form provided by the depository participant, complete the KYC check, know your customer check, that is give your PAN and Aadhaar details or other proofs as may be required, and link your existing bank account to the demat account that you're open. As simple as that. Now once you have that account ready, you can start the trading. So you can log into your demat account and place your buy or sell orders. Apart from that, you can also reach out to your broker and you may place orders over a telephone as well. So I hope with this basic information, you are now aware of what exactly is a share and how to open a demat account. To watch more videos like this, do subscribe to the channel and don't forget to hit the bell icons so that you get notified whenever I upload new videos. Thank you.